During these past 2 years, what has prompted the asset manager to prefer different and often innovative investment themes?
Innovative investment themes are a way to find outperformance. A lot of active asset managers in the equity class have lagged their benchmarks. And by finding interesting themes, that might be a way to identify stocks that will grow and perform better than the markets as a whole.
Which economies are moving in this direction and why?
Well, for our fund, Golden Age, we are playing the theme of an aging population, which is very prevalent in some of the developed markets. Japan, for example, has the highest proportion of elderly in the world. But you can also see it in Europe and the United States. That doesn't mean you cannot play it in emerging markets, because a lot of the companies, say from the US or Europe, have big presences in China, elsewhere in Asia Pacific or South America. Also, if you think about the penetration rates or adoption rates for certain products and services in emerging markets, they tend to be very low. One example is radiation therapy for cancer. The number of linear accelerators in China is 1/100th of what it is in the United States. So companies can benefit from that.
Can you summarize your investment strategy?
The investment strategy is to use the theme of an aging population to pick global equities that are growing faster than the market on a sustainable basis. The simple thinking being that if their earnings growth is above the market and the share prices appreciate in line with the earnings growth, then the fund as a whole will outperform over time. And we think, so our bias really is toward growth, but we don't want to overpay for that growth. So the style can best be characterized as growth at a reasonable price, or GARP. We're very disciplined about valuation, taking profits, stop losses, and we're managing for risk-adjusted returns. We do that by only investing in cash flow profitable companies, and we stay away from significant binary risk. Each time we add a stock to the portfolio, we measure its contribution to the volatility of the portfolio, and it cannot exceed 5%. Also, we have rules about minimum market capitalization. It has to be at least $500 million, and minimum daily trading volume, because we don't want to own more than a day's worth of trading volume. So right now the portfolio can be scaled up without negatively impacting returns. And we have managed to generate a significant outperformance. Over the last 12 months, the institutional share class was up 17%, which was 6 percentage points ahead of the market, and we did so incurring lower volatility. So on a risk-adjusted basis, if you look at the Sharpe ratios, they were very strong.
When it comes to choosing a company, do you focus on their core business or the markets or their stability?
All of those, really. We very much focus on the core business. We spend the majority of our time on bottom-up analysis, fundamental analysis. We do several hundred meetings a year with management teams around the world, and we build detailed financial models so we know what questions to ask them. So we can talk about the key drivers, be it organic growth, acquisitive growth, foreign exchange, operating leverage. We talk about gross margin expansion, how they can control SG&A or R&D costs. And we also focus on financial leverage. Are they buying back shares? Are they paying down debt? And so we do this. And when we meet with all the companies, we ask for their management's view on different markets around the world. So we might, for example, in the fall, we asked a company that derives close to 20% of sales from China what their view on the market was. And they said that they'd seen the market trough, things were beginning to stabilize and pick up. And this was actually before that the Chinese PMI statistics started improving. And by doing that, we put together a picture of what's going on around the world. We do that together with a top-down approach. So we read a lot of macro research, newspapers, we speak to sell-side analysts, we speak to other buy-side investors, just to make sure we're spending our time wisely. We don't want to buy a good house in a bad neighborhood. We want to buy a good house in a good neighborhood and make sure that we have tailwinds rather than headwinds.
Among the investment themes that you focus on in this moment, which ones are the most interesting?
Well, so in terms of investment themes, the whole portfolio benefits from an aging population, and that manifests itself in several different ways. One, we play a lot of chronic diseases, cardiovascular diseases, cancer. So the chronic diseases are a main theme. They're recurring diseases that need to be treated over a person's life. The second investment theme is wealth management and retirement planning. So as people, baby boomers, enter retirement age, they want to make sure they manage their finances correctly so that they can stay retired for many years. And we play that through asset managers. We can play it through even publicly traded private equity firms. The vast majority of their assets tend to be from pension funds, so we think that's a pretty good fit. In terms of other themes, we're also playing Japan at the moment. Japan has the largest proportion of elderly around the world. As many as 1 in 4 people are aged 65 or older. And that part of the population tends to be the wealthiest. So they actually own as much as 60% of individual financial assets, and they represent close to 45% of consumption in Japan. And so companies that can meet their demand in terms of products and services tend to do very well and outperform. For example, in Japan, just to give you an idea, there's as many as 10 million people aged 80 or above, yet there are only 300,000 nursing beds. So there's a huge shortage of capacity. And we're invested in a company that's in this market, and we think they will benefit from that. The Confucian values in Japan are unfortunately beginning to erode. It used to be that a family took care of their elderly, but now the elderly have to fend more and more for themselves, and therefore need space in nursing homes.